Did you say you're expecting a surplus of 300 million in 5 years' time?
Target.
So when will the taxpayer be expecting to receive a dividend from KiwiRail?
Firstly, the investment in our network is funded like a road. So that's separate. In terms of the above rail or our services business, under the current mandate is that we have to stand on our own 2 feet, which means we have to fund all the assets, all the people, all the training, everything on our own 2 feet. So at this stage, the ongoing sustainable business model for KiwiRail as an SOE is not a dividend. It is to be sustainable to reduce capital.
Well, it actually, as part of the SOE Act says, I'm sure you know, principal object of every state-owned enterprise shall to operate as a successful business and to this end be as profitable and efficient as a comparable business that is not owned by the Crown. Now, you mentioned before that you had overseas experts come in and look at the business. What did they give you as a scorecard on your comparability to other businesses?
Sure. You want to cover that, Josie?
Yeah, so I think, yes, so your question was when can the Crown expect a dividend? And I think that target of $300 million is the target that we need to achieve to fund the replacement cost of the capital. So the answer to your question is once we are above that level, we will be able to return a dividend to the Crown. So the business to be sustainable needs the discipline to leave that capital to be reinvested.
So it's going to be beyond 5 years. So to the second part of the question.
Yeah, that's right. And that's right.
What's the answer to the second part of the question? Well, you went back to my previous question. My second question was, how do you compare to other businesses?
Sure. So look, the benefit we had of global benchmarking, and a lot of our size is called a class 3 railway companies, smaller railway companies. A lot of it's private, right? So firstly, what we got access to was benchmarking, understanding our asset utilisation, understanding the configuration of our network. One of the key things that came out was we would be one of the most complex rail companies. We do everything. We're in scenic, we're in metro, we're in shipping. So one of the things was how do you simplify your business? And in terms of our benchmarking, we got all sorts of information around asset utilisation, performance, operating cost ratios, margin yields, etc. So it was a worthwhile project to help us move on with the transformation plan.
Well, so that didn't really answer the question at all about benchmarking, but since you've said it's a complicated business and it's got lots of parts, did you look at individual parts and how they compare to competitors that aren't owned by the Crown? For example, the Inter-Islander, how does that compare to its comparable non-Crown owned competitor?
Yeah, we have segmented our businesses, and Jason can talk about the Inter-Islander, but we've actually done a deep dive on that. But of course, there aren't that many in terms of the number of ferry shipping companies around the world. There's all sorts of different combinations, publicly and privately owned. But yes, we've done all our analysis on all of our businesses in terms of profit segments and performance. So
final supplementary.
Yes, thank you.
Is it possible that you could provide us with the analysis on how you comply with Part 4, Section 1 of the State-Owned Enterprises Act in regard to how you compare to businesses not owned by the Crown?
On a segment-by-segment basis, we've reported all information to Treasury. In fact, we've taken Treasury through our Inter-Islander business and our commercial performance and how that compares with the benchmarks we're looking at.
Again, the answer question, could you provide us with that? But obviously,
look, if you can later on. What I'm going to do is I'm going to move on to the next section,